Hello, this is Mijin from Magical Sheeran University. Today is January 2nd and let's start today's big dusing news. Welcome to Mijon, where we continue to uphold the fundamentals of investing in United States stocks as always. Wishing all Mijon Bomb viewers a happy new year. My New Year's greeting is a bit late since today is January 2nd. Actually, I almost wasn't able to send you today's broadcast. Because, as many of you know, tomorrow, January 3rd Saturday, at 10 a.m. Korean time, Chief Executive Officer Kim In-jung and I are preparing a special live broadcast. At Mijun, twice a year, in January and July, we select the stocks that are expected to have the highest returns over the next 6 months and reveal them to you, and we also go through a process of analyzing these stocks together. But preparing for this broadcast isn't easy, so actually my schedule is really packed today, and I was thinking I should take a break from today's broadcast. In the meantime, if you look here, you can see Kathy Wood's message of conviction in the dubbed video, right? So I suddenly snapped out of it. I realized I haven't properly greeted the Mijun subscribers yet in 2026. So I wanted to film even a short video to share with all of you. I quickly took a shower. Honestly, I wasn't even planning to shower, but I did it fast, and now I'm sitting here in front of the camera like this. I sincerely hope that everyone joining this broadcast will have lots of joy, success, and happiness in 2026. All right, for today's broadcast, I think I'll start by talking about something a bit special. With the new year, I'm sure many of you are making various resolutions, right? Now, in English, it's called a resolution. Let me show you for a moment. Yesterday, with my kids, I wrote down various resolutions we want to achieve for 2026. Well, actually, we didn't write them together. The kids first listed out the goals they wanted, and I checked them afterward. That's how we did it. Honestly, I wasn't completely satisfied with these plans and goals. So today, I thought I should share this with my subscribers and also help those watching this broadcast set their New Year's goals and resolutions. If you look at the screen, you can see the New Year's plans listed. Things like losing weight, exercising, drinking more water, quitting smoking, going to bed earlier, and since we've had drinks, there's also talk about cutting back on alcohol. I should pay off some credit card debt, and there's something interesting here. I should call my mother more often, and there are a lot of resolutions like this. But the New Year's resolutions listed here aren't written properly if you write them like this. The chances of achieving them are really low. I've mentioned this before, but I wanted to make plans for the new year. So I thought, why not share my own secrets of time management with you all? There are 3 things wrong with the New Year's plans shown here, and if you just fix these 3 things, anyone can make plans for the new year that don't just last for a few days. You'll really have a way to achieve them throughout the whole year. Now, let me share those 3 things with you. First, if you focus not on the result but on the process or the cause, the chances of achieving your goal become much higher. Now, what does that mean? If you look here, it says losing weight, right? Losing weight is the result. Don't focus on this. What's important is taking the steps needed to lose weight. Focus on those. So in my case, I don't eat lunch, so I make a decision like not eating lunch, or I run for an hour every day, something like that. Instead of focusing on the result, if you find the cause that can create the result you want and make a commitment to that process, everyone can eventually achieve the results they want, so we need to focus and think about this part. And the second secret to achieving your New Year's resolutions is that they need to be measurable with numbers. If you look here, you don't see any numbers, right? The reason numbers are important is you need to describe your goals numerically so that you can measure whether you've succeeded or not. If you can't measure your success, it's hard to stay motivated. So if you look here, it just says exercise. That's not the right way to do it. For example, You need to be more specific, like running for 30 minutes a day, walking for an hour a day, doing weight training for 30 minutes, doing 100 pull-ups or 200 push-ups. By quantifying everything like this, you can measure every day whether you've achieved what you wanted or not and keep moving toward your goal. This is the second rule of success. And the third rule for achieving your New Year's resolutions is that when you set your goals, you have to set a time frame. If you don't have a deadline, the chances of achieving it drop significantly. For example, there's this thing about going to bed a little earlier. You need to specify whether it's 9:30, 10 o'clock, or 10:30. And also, calling your mom more often. If you set it for every Monday at 5 o'clock or the first Monday of every month, you're much more likely to achieve that goal. And for example, if you're running, if it's every day, you should set it as running for 30 minutes every day, or maybe just on Monday, Tuesday, Wednesday, and Thursday, you need to set it like that. And if you look here, it says to reduce the number, right? In order to reduce the number, you have to set the exact time. For example, you have to set it so that you can only drink on Saturdays every week, or only on Fridays and Saturdays. Setting it like this greatly increases the chances of achieving your goal. Now, let me tell you again. When you make your New Year's resolutions, the first thing is don't focus on the results. Instead, I want to tell you to make resolutions and set goals about the causes that can create those results. The second is connected to the third. Describe your goals numerically, making it possible to measure daily progress and determine if you've achieved them. And third, you need to give it time. So whether it's once a week, every day, 4 times a week, 3 times a week, on weekends or on weekdays, you need to set a time frame like this. That way, the chances of achieving what you want become much higher. I wanted to share this personal tip with you all. All right, then let's get started with the first United States stock news of 2026 today. Yesterday, I celebrated New Year's Day. I prepared a surprise gift for all the viewers and subscribers who are with Mizon, and it's this very video. Originally, this was a live broadcast only for Mizon members. We've opened this video so that everyone can watch it at least once. But after this broadcast went out, I was really surprised. The video is actually over an hour and 25 minutes long, but so many people watched it all the way to the end. There are many comments coming in, even without promotion. So, there were a lot of compliments about the content of the broadcast, and the satisfaction level was really high. Thanks to all of you, I was also able to start the new year in a really good mood. I sincerely thank everyone who left so many nice comments, and your reactions were really enthusiastic. Today, I prepared a special gift. It's very small, but I prepared one more. I shared it through a post 3 hours ago. If you look here, it says, Mijun All-in-One Membership 50% discount event ending soon, right? If you scroll down here, you'll see the live broadcast link I shared yesterday, and there's another link here as well. What this is the video I shared yesterday, and since it's over an hour and 25 minutes long, I thought there would be a lot of people who want to see a summary of it. So if you click this link, you'll find the summary of the December Mijun live broadcast that I uploaded. So I thought it would be good for you to read through at a glance what was discussed, which is why I shared this content with you. I think it would be great if many of you could take a look yourselves. On the Mijun YouTube broadcast, in the first broadcast of every month, I show you my personal investment performance without any filters. The reason I share my personal investment results with you like this is because both the Mijun membership and the Mijun YouTube channel deal with topics that can be quite sensitive. Also, so many people trust the information I share and use it to set their investment strategies and directions. That's why you need to see for yourselves how reliable and effective the investment information I share with you is, and whether the momentum strategy I pursue with Mijun actually works. So, with that motivation, I hope you take note that I show you my personal investment returns every month without any exaggeration or omission. The investment returns I show you are direct screen captures from the Samsung Securities webpage. Because of that, it's impossible to manipulate anything, so you don't have to worry about that part. Let me repeat, the Mijun portfolio's final goal is 3.3 billion won. And creating this kind of goal within 15 years is the time frame I have. Like I mentioned earlier, every goal needs a time frame. So, the goal is to make 3.3 billion won before 2035. To achieve this goal, I need to have an annual return rate of over 20%. The United States stock market has years of gains, losses, and sideways movement, so I shouldn't aim for 20% returns every year. When the S&P 500 is doing well, I need to perform even better. And when the S&P 500 is in the negative, I need to defend against the decline in returns. So, my personal goal is to outperform the S&P 500 by more than twice on average. And when it goes negative, my goal is not to fall more than twice as much. Then let's take a look at how the Mijun portfolio performed over the past month and the past year. Here it is. If you compare the performance at the end of November and the end of December, unfortunately, the investment profit and loss is minus 38 million won. That means the monthly return is minus 2.84%. And if you look at the performance over the past year, the final result is 19.39. It's been a really long time since my annual return fell below 20. Back in 2022, after the bear market, my returns were always very high. But this time, the returns are a bit disappointing. Why did these returns come out this way? In the first quarter, there was a significant loss, minus 22.3. In the second quarter, it was plus 26.15. In the third quarter, plus 16.63. And in the fourth quarter, 1.37, which was almost flat. As a result, the annual return did not exceed 20. So, it's important for us to compare this performance with the S&P 500, as I mentioned before. Here it is. In the past month, that is, during December 2025, the S&P 500 closed at plus 0.24. And the United States Momentum Strategy portfolio was minus 2.84, so it performed much worse than the market. That's how we can summarize it. And the same goes for the performance over the past year. The S&P 500 closed up 16.39, so in my case, I would have needed to make over 32% profit to achieve my personal goal, but unfortunately, I only managed to get a 19.39% increase, so I wasn't able to reach my personal goal. Especially last year, my return rate actually went up. Shall I show you for a moment? It's on this page here. Here it is. In 2025, Q1 was 32, Q2 was 21, Q3 was negative, and Q4 rose to 35, making the annual return 109.56. Therefore, compared to these results, this year's performance was really nothing special. That's how I assess it myself. One interesting thing is this. If you look at the 2025 investment results recently posted by the Mijun members, the rate of return is not the best, but most of the members have achieved really successful results. Personally, I'm breathing a sigh of relief. If my investors hadn't seen good results, it would have been a big problem. Luckily, I performed the worst. If you look here, the person using the identification Young 40 is boasting an incredible return of 164. Let me scroll down and show you a few more people's returns. Here, the person using the identification Doldol76, their return isn't shown, right? We can't see the return. I've erased it here, but if you look, it says 13 and 41. As far as I remember, this person's return wasn't bad either. If you look here, who is it this time? DrakeCon has 70 and 65, and as for this person, I'm not sure. The exact return isn't listed here, but as you can see, the return here is amazing. 115, 119, 657, 75. So in the end, it looks like you made a total profit of 186. Thank you for sharing your impressive returns. This person's identification is Chakan Hama, and there's another one here. Kebangwan also shared their results. Is it 24? It looks like it. Palantir and Talon Energy are over 60. It's here too. Kevin96 achieved impressive returns of 53 and 39 this time, and I'm not sure if there are more. There are quite a few people who have shared their returns like this, so I'll take a look at their returns. Watching them gives me some comfort. This year, 2025, I personally didn't achieve my goal, but it seems that many people trusted the information in the content I provided and made investments, achieving really good results. So, personally, I'm satisfied.
Subtitles and advertisements are provided on the homepage of Kakao Talk Plus Friend.
Now let's take a look at the one-year return of Mijuan Top Pick. Since the first session of 2026 hasn't opened yet, the year-to-date return and the one-year return are the same. If you look at the very top, Bitmain's return has exceeded 248. This stock was only recently added to the Mizon portfolio, so it doesn't really have much significance. Micron Technology has also only been included for a few months, but as you can see, the 1-month return is over 20 and the 1-year return reached 239. That's really impressive. Now, from here on, you'll see the stocks that I've invested in for over a year. Celestica performed the best, rising over 220, followed by Palantir, which saw an additional increase of 135. Credo was also good. Credo Technology also went over 114. In addition, Talon Energy was up 86, AMD was up 77.3, and Google has been performing very well recently. 65.35, Taiwan Semiconductor Manufacturing Company was up 53.8, Broadcom was up 49.28, First Solar was up 48, Nvidia was up 38.8, Meta was up 12.74, and Tesla was up 11.36. These are the names of the stocks that showed an upward trend. On the other hand, all the remaining stocks are in the red. Bitcoin dropped, falling more than 6 over the past year. Coinbase was down 8.92, Ethereum was down 10.9, and Bitcoin was down 55. The ProShares Ultra Ether Exchange Traded Fund, which tracks Ethereum, dropped more than 65 over the past year. Now, as we look at this list, there's one thing we need to do. Let me tell you what that is. There are stocks that have performed really well over the past year, right? So we need to understand why these stocks have seen such strong price increases. The reason why that's important is because if we analyze which stocks have performed well and find the common factors among them, in the end, it can give us an idea of how to select stocks and adjust our investment strategies as we head into the new year, 2026. So, today's first broadcast of 2026, let's look for the common traits of the stocks that achieved the highest returns together. Just before, we looked together at the top 10 list of stocks in the Mizon portfolio that had the best investment returns over the past year. Among these stocks, except for a special case, Bitmain, the remaining top 9 stocks had returns ranging from at least 49 to 239 over the past year. Now, to find out why these stocks had especially good returns, I'm going to analyze them from various perspectives. Let me say once again, the reason why we need to do this kind of analysis is because if we can find the common characteristics of the stocks that had the most outstanding returns over the past year, it can help us find the most promising stocks as we head into 2026. Now let's take a look together to see what commonalities they have. The most essential common feature of the 9 stocks that had explosive returns over the past year can be summarized in one word. And that is, they are beneficiaries of AI, capex and cycles, and secondly, they are companies whose margin structures are actually improving. Now, most of the United States' main picks are AI beneficiaries. So I intentionally structured my portfolio that way. The second point is probably more important. Companies whose margin structures are actually improving had higher stock returns. That's the key point. Now, if we organize this a bit more structurally, there are a few common factors that keep coming up. The first is companies that generate real revenue directly connected to AI infrastructure and platforms. The second is earning estimates have been repeatedly revised upward. This is often called guidance or market consensus. When guidance increases, the market outlook improves. It's understandable that stocks with consistently rising earnings forecasts all year have seen notable price increases. The third point is margin improvement that's faster than sales growth. If margins increase more than sales, it means the earnings growth has been remarkable. That's how you can see it. And fourth, most of these stocks had valuations that weren't excessive compared to a year ago. Of course, Palantir is an exception. Except for Palantir, the other stocks weren't too expensive in terms of valuation at the start of 2025 a year ago. This is a common trait that can be found. And lastly, there was a turning point proven by numbers, not just by narrative. Now, when we choose stocks, we tend to focus too much on the story side. We're looking at dreams, right? So, focusing on these dreams. But investing in stocks that are proven by numbers has been more effective. We were able to confirm these three characteristics. First, let me talk a bit about valuation. As I mentioned earlier, the stocks with valuations that were neither expensive nor cheap, but rather ambiguous, produced the best returns. This is very important, because usually most people wonder how they can buy cheap stocks, and they tend to buy stocks with significantly lowered valuations. That's not the right approach. Don't buy expensive stocks, but don't buy just because they're cheap either. So, if you look at it based on a year ago, most valuations were neither extremely undervalued nor at a bubble level of overvaluation. Therefore, stocks that are moderately overvalued might actually be better, because these kinds of stocks usually have good momentum. So actually, that's why valuation is a common position. The growth trend is clear, but the real opportunity was when the market was still uncertain. That's the perspective to have. For example, stocks like AMD Broadcom, Taiwan Semiconductor Manufacturing Company, and Micron Technology. Everyone knew they were benefiting from AI, but there were doubts about whether the cycle would continue or not. That's why the valuations weren't excessively high. You can see it that way. On the other hand, stocks like Palantir, Celestica, Credo, and Talon Energy are examples. They have great growth stories, but many people were doubtful about whether their earnings would follow. So, when the market was skeptical like this, we could commonly find that it was actually an investment opportunity. So, to sum it up in one word, most top-performing stocks last year rose due to earnings supporting their multiples, not multiple expansion. Stock prices equal earnings times the multiple. But there wasn't much change in the multiples because many of the stocks already had high multiples. Even if the multiples were already very high, if the growth trend was really strong, that means the earnings would keep going up. As long as the multiples don't drop, the stock price can keep rising. It's important to remember this formula. Now, the second point is, we can find a common pattern in earnings and sales growth over the past year. To sum it up in one sentence, the growth rate of earnings per share was much higher, about twice as high as the growth rate of sales. When analyzing stocks, we often consider sales growth and earnings per share growth rates as percentages. But the common point among stocks whose prices have risen a lot over the past year is that the earnings per share growth rate was much higher than the sales growth rate. So of course, the sales growth rate also needs to be good. It shouldn't be too low. However, for example, if the sales growth rate is 20, then the earnings per share growth rate is 40, 60, 80, or even 100. These are the kinds of stocks that have driven price increases. That's how you should see it. Now then, we need to analyze why the earnings growth rate was much better compared to sales. We need to look into this. The first reason is that the structure already has fixed costs. What this means is there are two types of costs: fixed costs and variable costs. Variable costs are those that increase a lot as sales increase. Fixed costs are expenses that go out regularly, even if we don't increase sales or if the business isn't doing well. So, if there are a lot of fixed costs, since those costs go out anyway, the more sales increase, the more the margin will rise. You can see that these types of stocks generally have much better earnings growth rates. Now, secondly, it's when the sales mix improves. What is the sales mix? When we usually analyze a company's sales, we break it down by how much comes from selling certain products or from certain segments. When we break it down like this, some segments have very good margins while others don't have good margins. But the AI-related segments usually have very high added value. So, if the AI-related sales among a company's various sales increase significantly, naturally, the margins are bound to rise sharply. This is something we need to keep an eye on. Now, when we say the sales mix has improved, it means that the average selling price or average selling price has increased. We can infer this from the situation. For example, Micron Technology, Broadcom, and Taiwan Semiconductor Manufacturing Company. Sales rose in the memory, foundry, and network sectors, along with a higher share of AI-related products. That's why, as sales increased and the sales mix improved, we could see that the average selling price also went up. Now, Palantir is similar as well. The sales growth rate was rather moderate. However, due to the operating leverage effect, the earnings per share surged sharply. We could see this part clearly. Now let's try to express this with a formula. Operating profit grew faster than sales, and earnings per share outpaced operating profit. Stocks with these traits usually saw significant price increases. That sums it up. Now for the fourth point, let's take a look at the margin. What was the common factor among the stocks with the highest returns in 2025? In fact, it was the margin. First, the gross margin or total profit margin increased. You remember the total profit margin, right? Sales revenue includes unavoidable costs needed to make those sales. The remaining amount after these direct costs is the gross profit margin. So what happens when the gross profit margin goes up? There are usually one of two reasons. First, the gross profit margin increases when the nature of the business changes. Second, when a new product comes out, the gross profit margin usually goes up. What do the top performing 2025 stocks have in common? Usually, this was due to a surge in high value added AI product sales, raising the gross profit margin. And another thing is strong pricing power. This means that the sellers are in a dominant position, right? Since they can't meet demand, the average selling price rises, increasing the gross profit margin. When gross profit margin rises, operating profit margin usually does too, right? They've entered the harvesting phase after the capex period. As I said, with fixed costs set, higher sales mean the operating profit margin rises. That's the structure. And secondly, there was sales leverage that offset increases in labor costs and R&D. So the rate of sales growth was much better than the rate of cost increases. That's a common characteristic you can see. For example, Credo appears. Credo entered the AI network's bottleneck section. This was also extremely popular. Therefore, we were able to focus on selling high-margin products. There is a limit to production capacity, so when we manufacture, we can focus on making the most expensive and highest value-added products. Is it the same for Celestica as well? By expanding the proportion of AI servers and power network products, the margin structure itself has completely changed. It has become a completely different company. As a result, the margin rose sharply and the stock price followed. That's how you should see it. So, to sum it up in one sentence, it's not just about simple sales growth, but about finding stocks where the margin has structurally changed. Especially if you focus your investments on companies whose operating profit margins are improving, you can achieve good results. Now, the third point is that we found a common feature where the forecasts kept going up. It's not just a one-time surprise. If forecasts keep rising and we announce earnings much better than expected, that's a surprise. But if this keeps happening 2, 3, or 4 times in a row, we can see that the stock price keeps going up. That's the part we can summarize. What do the stocks with the biggest price gains among Ji-Hoon Mi's picks share in common? Earnings per share estimates have mostly risen from Q2 to Q4 over the past year. When we say earnings per share estimates are rising like this, first, the company itself raises its guidance. When the guidance goes up, analysts end up following and revising their estimates upward. When that happens, the stock price is re-evaluated, creating a chance for it to keep rising. That's how to view it. In particular, AMD Broadcom, Micron, and Taiwan Semiconductor Manufacturing Company management repeatedly insisted during earnings calls that AI demand is not temporary, repeating it like a parrot. The problem is that many investors didn't believe what they said, so the investors who trusted the management's words were able to make good profits. That's how you should see it. In the case of Palantir, commercial sales grew rapidly. Margins grew and free cash flow improved at the same time. If you find a stock where sales, margins, and free cash flow all rise, you can expect good stock returns. That's how you should view it. So, there's also an equation for this. Stock prices respond not just to actual performance results, but to the direction in which expectations for future performance are rising. When we analyze earnings results, the results for the second quarter come out first. And then the guidance comes out. So in the end, what's important is the guidance. That's how you should see it. Let's move to the sixth point. AI, companies that solve the bottleneck of capex are, as we all know, most of the current AI beneficiaries. This supply is not smooth. There's overflowing demand, but no supply. For computing chips, there are AMD Micron Technology, Taiwan Semiconductor Manufacturing Company, and Broadcom. For network and power, Credo. And for software platforms, CLS and Celestica. Palantir, Google Energy Infrastructure, Talon Energy, all these kinds of stocks. Right now, the suppliers definitely have the upper hand. So they're in a very advantageous position where the average selling price has no choice but to go up. That's how you should see it. Let me summarize this part in one sentence. You can sum it up like this. Find and invest in companies that are positioned in areas that are essential for using AI. Because these companies have few alternatives and are hard to replace, their average selling price can keep going up. Companies with pricing power eventually see their margins increase, and those with higher margins have usually achieved the best returns. That's how you can wrap it up. Now, let's summarize. The screening criteria for discovering promising stocks for 2026 that can be derived from this analysis are as follows. Therefore, if you find and invest in companies that meet these conditions, you can expect good results even in 2026. That's the inference we can make. First, look for revenue that is directly linked to AI capex. Therefore, among companies, the more they are related to the AI revolution, the more advantageous they are. This is something we need to consider. Second, companies whose margins are improving faster than their revenue, those whose margins are rising, are much better than companies whose revenue is simply increasing. This is something you need to remember. Third, companies whose forward earnings per share estimates are being revised upward. When guidance rises, market estimates follow. So every quarter, when earnings results are announced, you need to focus on which companies are raising their guidance. Fourth, companies whose management mentions structural demand in their guidance. So, when they keep saying things like, we can't sell enough because demand is overflowing, we need to focus our attention on those comments. Fifth, the valuation shouldn't be extremely expensive yet. Looking back a year ago, the stocks that performed best were those whose valuations were neither too low nor too high. That's why there's an indicator we use, which is the PEG ratio. When you consider the growth rate, if the PE is lower than this growth rate, then the PEG drops below a certain level. We can interpret this to mean that if you find and invest in these kinds of stocks, you can achieve good returns. And the sixth is a bottleneck. This means it's something you can't sell enough of because there's not enough supply, right? So it's advantageous to find and invest in companies that are active in areas where demand is overflowing, but supply is limited. Lastly, if you find and invest in companies whose operating cash flow is improving in numbers, not just earnings or sales, but companies whose cash flow keeps increasing, you'll have a higher chance of seeing good results. I'll wrap up with this. Now, I'll really finish with one last word from Ji-Hoon Mi. When we invest mainly in AI beneficiary stocks, are there any major risks we should consider? First, is the increase in AI capex by big tech companies slowing down? Up until now, big tech companies have been continuously increasing their capex. If this upward trend starts to decline, then at that point, we need to remember that there's a high possibility of a correction coming in the near future. That's not all. Since valuations keep rising, as we analyzed earlier, excessive valuations are not good. If valuations rise too much, we should see that as something that could also trigger a short-term correction. And lastly, there's a possibility that supply chains could be disrupted due to geopolitical conflicts. This also depends on how the relationship between the United States and China develops. As investors, we need to pay attention to this and keep following it. Now, even in 2026, I believe that despite ongoing macroeconomic uncertainty, AI beneficiary stocks are likely to keep growing. However, unlike last year, the sorting of the winners and losers will become much more intense. So in the past, just mentioning AI would cause many companies' stock prices to rise purely on expectations. I think those good times are over now. That's why we need to closely watch earnings and any guidance updates using quantitative analysis to monitor these factors. So, from an investor's perspective, we need to continuously look for stocks that consistently meet the success factors of the high-yield stocks listed above for 2025 and increase our investment allocation to those stocks. Following this framework, if we seek out companies like the Next Cellist or Micron, those still under the radar but showing early structural margin improvements, I believe we can achieve satisfactory investment results over the next year as well. The last content prepared for today is today's United States stock video. Today's United States stock video is very interesting. Dan Ives from Wedbush appears and selects 5 AI beneficiary stocks that are sure to explode this year. In fact, tomorrow I will also share with you my top 6 picks for the first half of 2026. Will the AI beneficiary stocks I selected yield better returns, or will the stocks chosen by Dan Ives in this video have higher returns? Let's review this again in 6 months. That's it for today's broadcast. I sincerely thank everyone who stayed with us until the end. Now it's the second day of 2026, since it's the second day out of 365 days. Everyone, please try to relax a little. I think it would be good to approach this from a long-term perspective. Think of stock investing as a long-distance marathon. Who can last longer without dropping out in the middle and make it all the way to the finish line? In the end, your returns will be determined by that. No matter how much of an investment genius you are, you can't beat someone who has invested for 30 or 40 years because of the magic of compound interest. You can't compare to someone who has only invested for 1, 2, 3, or 4 years. Someone who invests long-term for 10, 20, or 30 years with a healthy mindset and attitude is much more likely to beat the rabbit in terms of investment returns. So, instead of becoming a rabbit who focuses only on short-term returns at every moment, adopt a long-term mindset and affirm, "I will finish this marathon." With this mindset, I hope you all become excellent investors who steadily move forward like a turtle. Let's all keep going together until the day we retire through investing in United States stocks. Have a happy day. Thank you.
To celebrate the new year, I'll discuss a few tech stocks focusing on potential AI investments. This is Dan Ives, the Global Head of Technology Research at Wedbush Securities. Today, you're wearing a shirt that's a bit in the Magnum Private Investigator style, and the jacket is calm, so your choice of shirt is impressive. Since it's the end of the year, it's a time when we want to give meaning to the simple fact that the calendar is changing, but in reality, that itself may not have much significance. So I'd like to ask, do you have any favorite tech stocks? Which ones? While there are some stocks on the list, there are also some noticeable ones that aren't included. Does this mean you have a negative view of the stocks that aren't on the list, or is it simply that the ones on the list are relatively more attractive? I'm curious if you think that in the end, all of them will go up.
NVIDIA is still one of our most preferred core stocks as we head toward 2026. But if you look at the 5 stocks we've selected this time, Tesla, Microsoft, Palantir, CrowdStrike, and Apple, the key point is the ripple effects that are emerging as the AI revolution spreads. This is exactly our overall investment thesis as we look toward 2026. We believe that for every dollar invested in NVIDIA chips, there is a ripple effect of up to $8 across the entire technology industry. As we move toward early 2026, we believe these 3 stocks are especially likely to see strong growth, which is why we are emphasizing them so much.
You gave a very accurate summary at the beginning just now. NVIDIA is still one of our most preferred stocks, but it wasn't included in the 3 stocks we mentioned this time. That doesn't mean NVIDIA's performance is bad at all. You quickly went over the stocks. What investment story do you see for Microsoft? Is Azure the key?
Looking at the enterprise market, Microsoft is actually leading this competition in the trends of cloud and artificial intelligence. I believe Microsoft stock has about $100 of additional upside potential, and in terms of Azure and AI demand, Microsoft stands out as the most notable stock.
Apple doesn't have to be the best in these new technologies. This company has always excelled in hardware, ecosystem, monetization, and more. Even if they're a bit late to a new field, I think they're a company that can do well enough just with the overwhelming strength they've built up so far.
Up until now, Apple has had almost no presence in AI, literally. But as we move into 2026, we're expecting the possibility of a major partnership with Google around spring. If that happens, will the center of the consumer AI revolution flow through Cupertino, in other words, through Apple? I think this change is quite significant. Given the stock price, I see about $75 more upside from the AI premium. Eventually, this will be the point when the AI valuation multiple applied to Apple starts to rise in earnest. So even at this moment, I see Apple as a very noticeable and extremely challenging stock.
To be honest, I texted someone, when the speech bubble turns green, I wonder what's happening and how other companies even compete with Apple. The ecosystem is too powerful. I'm simple, but I can't imagine switching. Does anyone here not use Apple or an iPhone? Probably not. With iPhones, the text bubble is always blue. I'm just a beginner, but isn't that how it's supposed to be? Apple's ecosystem really seems on another level. Sometimes you see messages in a different color, right? If the speech bubble is green when you're texting someone, does that mean they're not using Apple, that they're not on an iPhone? Seriously? Is that really how it works according to Apple? But it just feels like Apple has people completely locked in. Then what about Tesla? Why is Tesla trading at such a valuation? What kind of multiple does it have right now? Is it because of the robot story?
Now, has the core of the Tesla story completely shifted to a new chapter of autonomous driving? Approaching 2026, this is likely to be the most important year in Tesla and Elon Musk's history. Is it due to self-driving and robotics? Even just looking at autonomous driving alone, it could be worth $1 trillion within the Tesla story. Right now, Musk can literally be called a wartime chief executive officer. For the first time in 30 years, the United States leads China in technology. And at the center of that, at the very front line of physical AI, stands Tesla, which is why I strongly favor this stock.
As subscribers, you may know about the famous achievements at Tesla, such as the units and so I wanted to make my own decision. Happy investing, supporting each other's dreams, and walking together down a beautiful downhill path. Happy investment. Together with me too, we'll all be together until the day we boldly retire with national stocks and bonds.